Welcome to the Southeast Retirement Planners Podcast, where we will go beyond the balance sheet with our guests, not only to share from our personal experience as financial advisors of over 25 plus years, but also to learn from our guests about the issues and topics that are important to them. Our firm specializes in taking care of the financial plans for individuals and small businesses by helping our clients identify their individual goals and taking a conservative and ongoing approach to helping accomplish them. We are located in Hickory, North Carolina, and look forward to continuing to serve our clients and our community. Thank you for joining us. We hope you enjoy this week's episode.
All right, we'd like to welcome everyone to the next edition of the Southeast Retirement Planners Podcast. Myself, and I'm Ryan Edwards, and
Les Stewart.
We're here today joining you. We're going to be talking about 401k rollovers, and as we're recording this, it's an extremely hot day outside, and we are thankful to be inside.
Yeah, it's really hot.
We are, Les, you've been doing a little baseball during the day and early in the morning, helping with the community event.
A friend of mine has a lot of people from the area, a lot of kids from the area, 12 and under. I think they got 180 some kids at the camp, and they're looking for water quite a bit out there this morning, but it's still fun.
Yeah, my boys were playing a little bit of golf today outside, and I had to send them with some hot towels and a bunch of water. So I was glad to be in meetings throughout the day in our office, and now here. So it
is July though.
It's
the end of July. August is the worst month here in North Carolina for heat. So we're about there.
That's right. Well, you know, with our name, Southeast Retirement Planners, obviously one of the ways the individuals accumulate a sum of money over time, be it through the various jobs or careers that they have, companies they work for, they've accumulated monies in a company retirement plan. And many times that's in a 401k, more times than not, sometimes simple IRA. And today's topic, we're going to be talking about 401k rollovers. What are your options? What do you do? How do you process it? Things you should consider. So that's something we deal with on a daily basis. Two of my meetings this morning were associated with what to do and the topic we're covering today.
Yeah, a lot of people, the 401k is an easy vehicle to save money in. We recommend it to everybody that's working. Do the easy save, and companies help you out a lot. But what you're not taught by the company is, what do I do with it once I leave the company or once I retire? And there's no real instruction book on what to do there. So that's where our services, are very helpful. But we want to take a little time here and kind of walk through, what your options are, make sure you're making the right decision and all that.
Right, and we've kind of got a slide that'll go along with this, but even if you're just listening to us and not viewing, that's fine, because it's real simple. We got 4 options: take it, leave it, move it, and roll it. So one thing that I saw in a piece a long time ago when I started, that's the only 4 options that exist, and it's we rattle them off pretty quickly, but we want to spend some time talking about each option.
Yeah.
The take it version is if there is an unforeseen circumstance and an emergency, we have to disclose this to every person. We feel it's necessary. I mean, we wouldn't be doing our jobs if we didn't, to discuss each 4 options. But the take it option is an extreme option. If what that means is you're taking it out of the 401k, out of the retirement vehicle, and in essence, putting it in your pocket. Mm-hmm. And with that comes taxes. And if you're earlier than age 59 and a half, it also comes with a 10% penalty.
Right. Well, even if you're past that age, you've got to factor in the tax situation. Even if there's not so under 59 and a half, what you're alluding to is the 10% additional tax penalty that you're charged if you take money out of your 401k. So if you leave a company and take, decide, well, I've got something I'd like to do with that money, even if it's what may be considered a small amount of money, 10% penalty plus whatever income tax bracket that you are in. Let's say let's say you're in the 24% tax bracket where, what you're up to, and then you take an additional $30,000 and take with state and federal tax, an additional 20% hit almost. So, you're looking at 40 or 45% tax. It could be subtracted out of your balance if you were to withdraw all that. So
that's sometimes that is an awakening for individuals. So that's why we call it an extreme circumstance. Right. I mean, that's not what, unless you're up against in dire straits, I guess you would say. But
even let's say you haven't educated yourself, or and I would hope most people, when you're talking about your majority of your life savings, which a 401k oftentimes is, let's say you retire at age 65 and you just decide, I want to move all that money to my bank account from my 401k. Well, that could jump you make you three depending brackets higher.
Yeah, on your balance.
So let's say you're in a 12 or 22% bracket and you have a $300,000 income increase that year. You're going to pay basically a penalty there for not being smart how you manage the withdrawals of a qualified, what we call a qualified qualified account, retirement account.
Correct. So that's that is the take it version. Now let's go on to the leave it version. So that leave it version means that, hey, you can leave it in your plan if your balance is usually above $5,000. Most plans allow you to keep the funds in there for a period of time and don't require you to move them out. And with that being said, you can no longer contribute to the account, and they're not contributing on your behalf in the form of a match either. And but it's still tax deferred. There's no penalties or taxes associated with that. So that's a pretty simple option. But you're also, in terms of diversification and what access to the monies if you need it, it's a little more cumbersome.
Yeah, and it's just hard to keep up with and manage. We oftentimes see people come in, and today's day and age, people change jobs every 5 to 10 years a lot of times. I don't know what the average is, but I'm sure that study is out there. But we see people that have changed jobs 3 times and been very successful in all their jobs and saved well in their 401ks. But oftentimes they'll have 3 different 401ks and they don't know how to contact the company from, that they worked at 12 years ago, and they don't know how to log into their account to check their balance, or especially, maneuver the investments around within it to keep up with the changing economic and market environment. So, the leave it is an option, but I think a lot of times people leave it and forget it.
Yeah, exactly.
So
exactly.
That's one thing to, think through.
That's right. Well, let's go on to the third, which is move it. Mm-hmm. And what that applies to is you could move it to another 401k retirement plan at the next company you go to work for.
Right.
So, if you're not retiring and you're just changing jobs, instead of leaving it in the company's retirement plan you just left, if the new company you're going to allows for you to roll the money over, then you can therefore move it or move it into. And we're going to talk about the rollover in just a second, but that's in essence what it's called. You can transfer it from one or move it from one 401k to another 401k.
Yeah, and most of the time when you start a new job, you leave a job and start a new job, the HR department will get you the paperwork that you need to do that rollover from the old 401k to the new 401k, and it's sometimes a good option for folks. A disclaimer: we never paint everybody with the same brush. Not one size fits all, but a lot of times if you're just starting to save for retirement, or if you're early in your retirement savings, it makes sense to combine those 401ks into one versus leaving it in multiple 401ks. Yeah. That way you can manage it, and your balance may not be enough to move it to an IRA that you need managed by an advisor or something like that. So it's an option in the right circumstance.
Right. The one thing we get asked sometimes is, if I do that and move it in, does the money I roll in or transfer in from the other 401k, does it get matched? And that's not the case. The only matching that occurs from one within a retirement plan is what you contribute, actively contribute, not what you transfer in. So that would be a great option if that doesn't occur.
and some other things you need to think about is how much access. And we just talked about, you don't really want to access your retirement accounts before age 59 and a half anyway, but there's circumstances where you have to. At one point in my life, I needed access, and it was helpful for me to do that. And you need to know how you can access each plan. 401k plan has different rules for that. So
they're much more stringent than IRAs, which is where we're going next, which is the fourth one, which is roll it. And rolling it means rolling it into an IRA, which stands for an individual retirement account, which kind of takes off the handcuffs that may have applied to a company retirement plan. Because the access, which you just mentioned, if that is the case, 401ks only allow if they don't have what's called a non-hardship withdrawal. Most of them, the only way you can access is with loans or hardship withdrawals. And hardship withdrawals come with that taxes and penalty as well.
Sure.
Loans don't, and that's a whole nother topic I don't really want to get into. But in terms of roll it, that option, what that simply means is you have the ability, if you have a 401k or retirement plan balance, the ability to roll it into an IRA, which means you work normally with an advisor or a financial institution where they will work with you to make sure the check is cut appropriately for your benefit. And as long as those funds, and remember, it's not a taxable event, there's no penalty, so none of that needs to be withheld. They'll cut the check to you or roll over automatically into the new financial institution.
Right.
Normally that you have at least 60 days, and that's something that we helped two individuals with it this morning.
Yeah.
And it's a process that is not always as easy as one thinks. But
it's one that you pay dearly if you don't do it right.
Exactly.
For sure.
If the right box is not checked, then they cut you a check and not the retirement account a check. Then that's a big taxes and penalty.
And it's tough. It can be done, but you have to get your accountant involved and make sure the paper trail looks exactly right. I mean, you throw up $100,000 all of a sudden hits your income, and then you sort of say, I
made a mistake.
We're not going to pay for that because it's really supposed to be a rollover. Well, the IRS then starts checking into a lot of things. Could be.
That's a red flag. So not to get into the whole processing isn't enough. We would certainly encourage you to work with professionals. Obviously, that's something that we do, but that really puts a feather in the cap to working with someone you know and trust that has the ability to assist you with that paperwork and that process. Sometimes it doesn't take one of my instances today is not going to involve paperwork, but most of them do. And the way that happens is you call the 401k provider once you've left service, and they sometimes, most of the time, have paperwork involved, or they may take instructions over the phone, but you need to have a house for it. And what I call that is, I call it a house, but what you need to have is an account for it, an individual retirement account, a rollover IRA, and that rollover IRA is the house for it. And that once those funds are taken out of the 401k, they can roll over into that account. And then at that time, you don't have the restrictions, and we'll get into that about the options here in just a second. But
now, Ryan, can I roll my 401k to an IRA and then later roll it back to another 401k?
You do have that option.
Yeah, you
can't do it in the same year.
That's right.
You cannot do it in the same year. That there's a IRS rule against that.
Right. So you can only do so many rollovers in a year.
Exactly.
That's right.
So that is that's a little new fact here in the last few years, but it is a good question. Remember, you're not taxed or penalized on a rollover. Okay, that's something to remember. But there are some things to consider when you're rolling over your 401k, and with an IRA. With most institutions, with investment firms, you have a tremendous, I guess the word not tremendous, but a very large amount of investment options.
Right.
That you need someone to help you filter through. And
Sure.
what I mean by that is normally a 401k has anywhere between 8 to 30 options in standard plans that you're limited to investing in. That's not necessarily, that's just the way that world works. But, the world is your oyster in essence with other firms. That's whatever's appropriate of good, it's been done due diligence. It's appropriate for your timeline, your aggressiveness strategy. Then individuals like in an investment firm, they'll usually have an option for you with that.
Right. So, that should be considered obviously for certain people in certain stages of life, and if I'm somebody that sort of I just want to save and put it in something aggressive and watch it and check on it every now and then. I'm not too worried about the ups and downs of the market. It may totally make sense to keep it in the 401k plan with the fact that if that were the only factor, it probably in most cases would, but then the next thing you want to look at is what are the fees and whether people want to, we hear people come in all the time and say my investments have no fees. Well, that's rarely ever the case. There's a fee, you just don't know where it's at. It could be a fee for inside the funds that you're investing in, which oftentimes in a 401k plan is.
Correct.
Those fees, what would you say those fees could range? We're just estimating here.
They could be from minimal to a lot.
Yeah.
It's just across the board. It's based off the size of the plan.
Right.
Based off the size of employees and average account balances.
But you oftentimes have to study your statement pretty
Correct.
hard to find out exactly what your fees are.
There's on each website, company's website, they'll have that laid out. They're required to.
Right.
Within the last 5 years, they're required to disclose all those fees.
Yeah.
Which may not show up on the statement always, but it may. But they're embedded inside the fund.
It's available if you're willing to dig hard enough. Yeah.
Exactly. So that's something definitely to consider. But then also, can you leave it at your former employer? That's something to consider. Because then that is, do I eliminate one of those 4 options right out of the gate?
Right. I know for sure that if your balance is in a certain level, and that's what I've seen is $5,000 or $10,000. If you're not at least $5,000 or $10,000, they don't even give you. If you don't give them instructions to move it somewhere, they will just send a check to your.
Correct.
To your mailing address at some point.
That's taxes.
Yeah, so that's going to hit your taxes. But so if you have a small balance in your 401k and leave a job, you really need to look at your options pretty quickly on that.
The another item is, do I need access to it? And you mentioned that. That was a good item that you brought up is, you're taking kind of some of the handcuffs off yourself by moving it out, rolling it out of a 401k and because it's in your individual name, individual retirement account, and you have more access. Now, there's no way to get around penalties and taxes, but, you may not have to fit into the restrictions that are associated with some 401ks, such as eviction or health care, major health care situations, items like that.
Sure.
So if the need for access to the money may be a good reason why you need to roll it over to an IRA.
Yeah, and not every 401k is built the same either. There's, behind each 401k plan, there's a company that services that. And sometimes they have people or, phone agents or whatever you want to, it's usually a call center you have to call, and, they're not going to know your specific situation. If you don't know the terminology exactly right, they may, not be able to give you exactly the advice that you're looking for just because you didn't ask the question in the right way.
Yeah.
So staking another with how do I access another thing when you retire. Let's say your money's in your 401k. How do I live off of that? What are my options to get that paycheck, each month to live off of, and a lot of times people find that those are pretty limited.
Right. That's a good point because, I had a buddy of mine that, he's probably, if you looked at his age, he's 20 years away from what would be standard retirement age. But he was asking, he's spent a number of years within the state system, and retirement's a little bit closer for him than individuals that are normally 45, 46 years old.
Right.
And he had some questions of me. He was saying, "How do I access the money?" And that's it is a little more cumbersome in a 401k. It's hard to turn on a supplemental income.
Right.
Usually. With the new Secure Act and everything, you want to be very aware of how money's may pass along to beneficiaries. Not just primary, but God forbid if something happened to you and the primary beneficiary on your lines, who does the money go to? Is it as efficient in the contingent beneficiary lines? That's some things to think about, and that's kind of getting in the weeds a little bit, but it also lends it that accessibility. And what we really want to encourage everyone to do is find someone you can talk to help you walk through this process.
Right.
You were alluding to it. A lot of times the individuals at the providers, they try to do a good job, but they don't necessarily, they're just reading off a screen many times. And we would encourage you to find someone you can know and trust to help guide you through this process. Sit down and talk about how your 401k, the balance you've worked hard to accumulate, how does it play into your overall financial plan? Mm-hmm. And for many individuals we talk with, they are going to need some form of supplement to their Social Security income in retirement. And how can we help you determine that is one of the things we do.
Right.
And it comes into how much can I take? Will it last for me? What are my other pools of money? How does this pool of money that I've got to roll over potentially from the 401k, how does it play into my overall situation to form that income? So that's going to be another topic that we talk about on a future podcast is retirement income planning.
Right.
But for today, we wanted to just go over the items associated with 401k rollovers. Les, have we left anything out that's glaring?
No, just in summary, it's not a decision where automatically I roll it over, or it's not a decision that, it's something where I should just forget it and pick it up when I decide to retire and then cash it out. There's some you need to put a good bit of thought into your options and consider what's best for you, and a lot of times that takes talking through somebody that knows what all the options are. So, that's we would love to help anyone that is considering those options. We've been looking at these things for a while, but another thing is the 401k world is always changing too.
That's right.
So we try to stay on top of that, and I hope other professionals are as well. But it'd be really hard for an individual to do their daily jobs and lives and be on top of all the things that are changing inside of that.
And this applies for any individual, not just pre-retirees or retirees, what's in that category. It's also for individuals young that are changing jobs. Their scenario needs assistance as well.
Right.
So good points. Good points. But we're happy to that you joined us today for our additional 401k rollovers. Once again, I'm Ryan Edwards and Les Stewart. Today, talking about 401k rollovers. We offer anyone that doesn't currently work with us a complimentary what we call financial checkup. And that's a 1-hour session where we sit down together or have a Zoom conversation together online to more clearly find out your situation and learn more about us. So if you're listening today and you don't currently work with us, we simply offer that to you. We'd encourage you to call our office, 828 855-2067, or also to find out more about us, you can go online at scretirementplanners.com and log in there, learn about us and the services we provide, and you'll see a whole tab on 401k rollovers as well.
Yeah, there's some great information on there. There's a place where you can, communicate with us if you have any questions, and even set an appointment if you want to. So, go on there and mess around, see if there's something that'll benefit you. And if you don't find it there, give us a call, or give us a call either way.
Yeah, that's right. Thank you for your time. Have a great day.
Securities and advisory services offered through LPL Financial, a registered investment advisor. Member of FINRA, SIPC. Southeast Retirement Planners is not affiliated with LPL Financial or registered as a broker-dealer or investment advisor.